What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 22nd of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we've got three simple topics to talk about. We're going to start by diving into the market correction over the last 2 weeks, talking about my general sentiment of where I think things are going. Outside of that as well, I'll be talking about how you can stay ahead of the market and beat out the rest of general investors, spotting which plays are outpacing Ethereum. And last but not least, we're going to be diving in towards setting realistic time frame estimations. With all due respect, I want to provide some important feedback that I think all of us need to hear in the market when it comes to setting up estimations for the market, even though we can be optimists and understand the potential of crypto. All right, let's go ahead and dive into the first topic here that's probably most relevant for everyone, Bitcoin's price action. What's going on here? So we started to have a rebound over the last previous two trading days, back on the 19th and the 20th, and then we've started to roll over here over the last 48 hours. So again, as we talked about, guys, one of the big things that we set forth is not only setting our conservative time frame estimations for when we'd reach some of our higher targets in the cycle, but also understanding that with each of the moves in this market, we're having very long periods of consolidation around support or resistance. So for example, we can see that we had a multi-month resistance from February to May, right? Multiple months of generally sideways price action after having a significant rally here in Bitcoin's price. And then outside of that as well, one of the most significant mid-cycle corrections. Again, a lot of people thought it was a bear market, but we talked again about this 30K range testing previous support here in the past, right? Over multiple months, we went all the way from May here to July, one of the longest consolidation periods for a mid-cycle correction that we've seen in history, right? So again, really decent amount of time where price action just pushed sideways. And we've also talked again about how that is going to repeat up here yet again. I know people want to see by the end of the year, the price is going to reach 100K and we're just going to completely break through. But that is likely not going to be the case. I'm talking like 95, 98% assurance, guys. There's got to be some crazy macro event that changes that. And this is pretty justifiable here. We've had a great recovery here in price action, right? This has been incredibly bullish stuff. Even with this correction, we're still at 96% over the last 120 trading days. I can't tell you of a market that performs that well. Not to mention, if we take it from the highs here, I think it was around 125% in price performance, right? Over an even shorter trading period. So overall, price action is doing exactly what it needs to do. It needs to turn this multi-month range of resistance that we've cleared through. We need to make that a foundation of support so that in order to be able to continue breaking out higher and be able to reach much higher multiples in price, reaching that six-figure target that everyone's looking forward to of 100K. And I think that this is going to be the foundation here, whereas we enter into the new year, right, we'd be able to start chartering up towards $100,000. Right? And I think that's a very, very realistic expectation. We could see that in Q1, right? But that's the overtly kind of optimistic and bullish case scenario. That's really, again, something that we're already asking for a lot here for us to be able to reach 100K by that time frame. Now, I want to go ahead and spend some time to kind of close off this topic of setting estimations. And I don't want this to be seen as a controversial take or me insult anyone, guys. I'm going to be specifically talking about Plan B specifically in today's video. And I want to make it very clear. I'm a lover of data science. I absolutely love data science models. And I want to give a major shout out to people like Plan B, to Willy Woo, a lot of people out there who sometimes get a lot of flack and stuff for trying to make predictive models on the market. Because at the end of the day, if you're able to go out there and be able to make models, in this case, that are aimed at interpreting the market with what limited data we actually have to work with, right? Last 10 years of Bitcoin's price action, I think that's a pretty incredible thing. Right? So I want to go ahead and just make that shout out there and showcase my full admiration for people who actually go out to do that. What I really have a problem with in the cryptocurrency space is that because we really don't have many people to look up to for data science models, there's really a couple of major individuals in the space. The problem is that a lot of people take these data science models, or more specifically, the people behind them, as kind of a monolithic source of truth. All right? And I've said time and time again here in the channel, whether it's other people or myself, guys, that you cannot take my opinion or anyone's opinion, more than anything with a grain of salt, right? You should be taking it with a grain of salt and should be utilizing that opinion alongside many other people in order to justify expectations for the market or get some kind of reading of where things could be over a given time frame. Because if you do that, you can really start to get much more accurate with your predictions. Not only that, you can start to set realistic expectations that aren't going to burn you in the long run, whether it's involved in your trading strategy or just setting your estimations on, hey, when is my portfolio going to hit this value, right? I think those are all realistic things that people want to do. And the problem here is there's a little bit of misinterpretation here. Most people think that by us not reaching Plan B's prediction of 98K by November, that this invalidates the S2F model, the stock to flow. And it does not, right? As Plan B says here, right, this would not invalidate the stock to flow model as he was utilizing what's known as the floor model. And this is overall, and I'll just go ahead and show an example here. You guys are very used to seeing the stock to flow line here, this kind of line that showcases the kind of fair value of Bitcoin, generally speaking, after the halving event, right? And of course, it takes time for price to catch up to it. But generally speaking, we can see that price kind of hovers around this price. It'll usually blow past it and will generally average to some degree around this line post, the halving, right, over time. Now, I want to go ahead and step back here, though, because even though us not reaching 98K by November does not invalidate the stock to flow model, one thing I really want to showcase here that I think is important and transparent is how people can get things wrong. Plan B is an incredibly genuine person in the space and has created some really great models. But this is the kind of stuff that I really can't handle here, which is that, he's still standing by the fact that there's 98,000 happening. This was back a couple days ago within 13 days. Now it's within 8 days, and he has not given up on November reaching that level. I'm just going to go ahead and be completely honest with you guys and candid. When someone's making a far out call, you got to call it out for what it is. We're not reaching 98K by the end of November. We've been saying that for a month now. It's been absolutely clear that we're not going to be reaching that. Like 99% confidence. Yes, maybe there's 1% chance I'm wrong, right? And I'd love to be proven wrong in that case. It'd be awesome if the market could blow off like that. But unfortunately, we are not going to get this major super cycle that people are talking about. And it's not going to happen overnight, because of the way this market cycle is driven by leverage and credit and how we have these long accumulation patterns, right? So taking this at face value and utilizing it as your one expectation is going to be crippling when it doesn't actually happen. And then outside of that as well, one important thing that I do want to point out here that would, in a sense, start to challenge the S2F model, and I think, again, is why, and I'll get to this point here about data science models, how they can be modified, and outside of this as well, how they are not perfect. There is a tweet here that Plan B had put out back in June 2021 that was basically stating here that 41% now think Bitcoin will stay below 100K in 2021, invalidating the stock to flow model, right? So the idea here is that the actual core fundamental value is showcasing that by the end of this year, we should have 100K Bitcoin. And again, I want you all to understand here that I really do not think, again, even if we start having an optimistic turnaround here, that we are going to see some kind of rally up here towards 100K, right? Even on the logarithmic chart, it looks like it could reasonably happen here to some degree. But to be honest, guys, again, this is what you're calling for. You're calling for price to do this. Has it done it before? Sure, we've seen it before. But what we're estimating for here within a matter of not even 5 trading weeks, because this starts to step into mid-January, is an 88% rally, or actually, sorry, I got to shrink that a little bit, 75% rally in market price. Does this make the stock to flow model worthless? I don't think so. I think that's a pretty impractical way to view it, because yeah, it could come in January, it could come in February. But we're adding some additional time here. We're adding a couple of months, right? Not a matter of a couple of weeks. And I'm not going to rag on Plan B for making that statement and stuff. I think more than anything, it doesn't invalidate the model whatsoever. But we understand here that models are just models, guys. They're giving us an idea of where we should set our expectations, right? And the S2F model, with all the flack I've seen people give it, I love the S2F model. I think it's great. And yeah, there's going to have to be adjustments over time. You get more information over time, right? So again, I think the problem here is not the data science model. I think the problem here is the community setting expectations that one person is the monolithic source of truth. Willy Woo, Plan B, myself, other YouTubers. There's Benjamin Cohen, who I love. He's a cool guy. There's all kinds of different other YouTubers out there who I really admire in this case. But none of us know exactly what's going to happen. You got to take what I say and what any others say and take it with a grain of salt and merge it in towards a probably crowd-sourced opinion on what's likely to happen, right? You got people like myself who believe in expanding cycles. You get people who believe in the 4-year cycle, Bob Lucas. A lot of great people out there you guys should follow, right? But again, no one is that single source of truth. Now, again, I wanted to go ahead and talk a little bit about one last piece of macro news here. And again, I think this is something that, again, is good and bad, right? Michael Saylor from MicroStrategy came out and discussed about Bitcoin being a $100 trillion asset class. One thing I really love about this is that on a macro scale, on the time frame that Michael Saylor is talking about, this is absolutely something that's practical and could happen with the money printing that's going on, and Bitcoin is an emerging asset. I would actually kind of say that this $100 trillion market cap is going to be over the next decade or so. And it's going to be not just Bitcoin, but it's going to be other cryptocurrencies. I think that's a reality we're going to have to accept here if we want to reach that $100 trillion mark in the next decade. But what I don't like, again, is when these headlines come out, people expect that it's going to happen overnight. And it's not going to, okay? It's just a realistic thing to state, guys. And I think there's a little too much overtly bullish sentiment in the market, a lot of froth in the market, as it's commonly referred to as, that it's never going to end, the going gets good, and it's never going to stop, right? The last thing I want to talk about here, though, is that even though we're setting in these kind of realistic time frame estimations, we're bullish on this cycle, guys. We think Bitcoin's going to 200K, Ethereum easily going to $10,000 to $20,000 in this cycle, probably more 15, 20K, right? So where we're at right now, right? Ethereum is holding out quite good here. It's doing exactly what Bitcoin's doing, making support on previous resistance. And as you guys can see here, right, it's doing exactly what it's done before in the past. Previous resistance turned into new support over a multi-month time frame during that accumulation period, sprung off price higher to set new all-time highs, right? We saw this back here as well, roughly speaking, resistance here around the $300 range, close retest here, right? And then we've made that range support, and then we continue on higher for the cycle, right? So overall, price action is looking really great here. It's just taking its time to set up for these bigger moves, right? If you want to get that blow off top, if you want to get continuation, you need to make previous resistance support, right? But a lot of you might be asking, okay, Nick, we get it. You're a passive optimist in the market. You have a longer time frame estimation, but you're still optimistic. How do I know that I'm on the right positions in the market? Well, the key thing that I would tell you guys to keep an eye on is whether or not you're outpacing Ethereum. Ethereum, generally speaking, this cycle has been outpacing Bitcoin. And it's, I think, the safe bet that we've talked about continuously that you should generally consider being exposed to if you want to have something that outpaces Bitcoin, right? Instead of just being long Bitcoin, we think that being long Ethereum has generally been more beneficial. And that has paid dividends ever since we rotated on altcoins back in the summer, kind of late part of 2019, going into 2020, right? It's been very, very beneficial. But outside of that, I would want to talk a little bit about plays like Radix here, right? Some of the competing layer 1 protocols, right? Not only has this been doing phenomenally well to the upside here, it's become one of our larger positions in our portfolio as it's come out of the accumulation phase. But outside of that as well, against ETH, right? It's still continuing to hold towards its highs here, even during these corrective periods with Bitcoin, making up for a year's worth of underperformance here against Ethereum in just a matter of a couple weeks. And I really think this is going to continue to start to spring up here. So what you want to do is you want to find plays here, whether it's plays like Avalanche or other layer 1s and stuff that are basically outpacing Ethereum here or have the continued room and ability with their market capitalization to continue outpacing against Ethereum. Right, so these are some things that I would say to keep in mind if you're positioning yourself in the market, is not only to be exposed to leading plays like ETH, but plays that are outpacing Ethereum here, especially because altcoin dominance is holding out damn strong here. I'm sorry for the language, guys, but I gotta say, altcoin dominance is killing it, right? We would have expected back in May, many people were going, oh, it's a bear market, you get out of altcoins. Generally speaking, altcoin dominance is doing great, right? And sure, you might have some plays in your portfolio that have lagged, some that have exceeded, right? But overall, if you're on the ball with the altcoin space here, there's still a lot of opportunity. And I think we're still on pace here to be able to go in Q1 towards 64% market dominance between now and that time frame. So again, there's lots of opportunity here that we can spot in the market and take advantage of. But again, I think keeping your eye on the leading plays like layer 1s, the metaverse, right? Play to earn games, all those areas in crypto that are really starting to lead. If you keep your eye on the prize on those, you can really start to win out in the long run. All right, guys, I've rambled on enough. If you like this video, please drop a like. Unfortunately now, thanks to YouTube, we can't see how many dislikes there are. I don't know if maybe it hasn't gone into effect for you guys. It's kind of something I think they're testing out now. Yeah, YouTube's always doing incredibly creative things. But I would love to see if you guys dislike my videos and if you like them. And I do always generally like if you can like them, but man, YouTube has made some interesting decisions. I've used YouTube since 2007, and getting rid of how many dislikes there are, that's a pretty interesting move. I digress. I can't change it. I have no power, but I can at least voice my concerns, and I hope you guys will too as well on that change. But if you haven't already, consider subscribing, hitting the bell icon while it is still there so you guys can still know when my content drops. YouTube has manipulated that many times. And anyways, I hope you guys have a fantastic rest of your day. Make the best of it. Keep your estimations as conservative as possible. It's never bad to be proven wrong on the optimistic end. Until the next video, I'll see you all in the next one. Take care, everyone.